Good afternoon, everyone. BC Bridgefield here, coming to you live from London. A really big shout out to everybody watching the stream live today, as well as all of you that watch it on recording. So we are here Monday, 17th of March, heading into another big news week when we look at US equities, or we look at, US interest rates, the economy. So we're actually going to kick off with that today. Apologies if you hear any news through the stream. We've actually got a little bit of warm weather here in London. I mean, relative for London. So my beautiful husky is currently sat out on the balcony in one of the sitting rooms that's opposite the office. So she's that. Anyway, what you can see on the screen at the moment is the home Twitter page of our very own crypto burb. Okay, the reason that I've got this up is if you would like to get free access until the end of March to our paid Discord, where you can access professional trading team calls, where all of the calls are posted, obviously with the thoughts, the setup, the take profit, the entry price, etc. All are monitored. All statistics are released every month. Everything is done with an open book, so you can see exactly how profitable we are, the team are. Obviously, all of the wonderful members sharing their results as well. One of the key things in these market conditions for me, though, that you get access to is the education. You're drawing upon literally decades of experience with the professional trading team that we have at TBN, let alone Crypto Burb himself, a CMT, level 3 chartered market technician. So if you want to come and grab those resources, if you want to come and start preparing yourself, if you're an investor, if you're somebody that's kind of maybe been caught out by this, maybe you're somebody that doesn't understand traditional markets or the macro a little bit better, maybe you're somebody that wants to learn how to trade, learn the fundamental sides of the markets, then there's a little bit of everything in there for you. But I really, really would recommend grabbing this offer. It's completely free, so you can come in. There's no stress, no strings attached. And I would just really be focusing on education and just absorbing myself in what the market's doing at the moment as well, how traders are looking at the market, how funds are looking at the market. And, if you're somebody that's looking to position yourself in these times, where are these positions? What are these levels? They're the kind of things that you can learn, all right? Best investment, yes, it sounds cheesy, but the best investment is always one in yourself. And this is free until the end of March. So do with that information what you will. All you need to do to sign up is go across to Crypto Burb's Twitter page, click on the link, you'll go through, you just need to like, share, and comment, and then somebody will get in touch with you and give you your free access. Okay, so where do we go from here? Well, I want to start with the news. Obviously, loads of good mornings as well. Foreign trade crypto. Sorry, Nit and everybody in the chat, completely miss the good mornings to everyone, or good afternoons here from London. We've just tickled over the midday point. So what are we looking at here? Let me zoom in a little bit so you guys can see this a little clearer. Today, at 12:30 p.m. So actually on the live show. So one of the reasons I wanted to bump the live show back again today, because we basically had, you have those daylight savings changes, and we've changed here in London or Europe compared to the US. So the 5-hour difference to the East Coast, as we're looking at the US equity markets open, has dropped to 4 hours. So henceforth, while we do some of the live shows at the moment, like Wednesday, we'll be back at 11 a.m. because running the trading desk, we focus very heavily on the equity market period. So we'll actually be live trading with members at those times. So again, if you want to come and trade live with me Tuesday, Wednesday, Thursday, and Rezoom is on the show Thursday as well, we mix in some live trading, some scalping. The live trading section's up about 86, I think, or 87 R, so risk to reward. And yeah, we were gunning for 100 R by the end of February, which was missed just a little bit. but still really, really proud overall of what we've done there. So you can come and be part of all of that. Anyway, these factors are really, really key for the market. So I don't care how obsessed with crypto you are. If you think these things don't affect the market, then I'm afraid you're just simply wrong. What we're looking to gauge here is what the market's risk appetite is. Just Pitt, my brother, how are you doing? One of our top price action traders over at the Bird Nest, and just one of the best price action traders I've come across in years. Get the joy of Pitt's company. You get his trades, his insights as well. So do come along and make sure you kind of grab that up. Anyway, back to the news today. We're obviously focused on the US. What we can see here is we've got retail sales, all right? Now, why is that important? Well, it's not like, I don't want to say it's as important, but it probably doesn't have the sort of volatility injection of like your FOMC, for example. Federal funds rate is coming in. We're going to discuss that in a moment. But core retail sales and retail sales month on month, these things are really key because they're one of these factors that you plug into the gauge or the health check of the economy, all right? So obviously you want to see retail sales doing well. One of the really good things with Forex Factory here, no affiliation, by the way, but one of the things I like is if I'm teaching this or if you're going through with students or community, you can look in this little detail tab, right? So when you've got core retail sales, maybe you don't know what that means. Maybe you don't know the difference between core and just regular retail sales. It's the same with things like PPI, CPI as well, all right? So you can just click on this and it just tells you up here, look, change in the total value of sales at a retail level, excluding automobiles. That's what makes it core, all right? But that's really quite a big factor, right? It's like when you look at core when you're looking at sort of like PPI and stuff like that, right? And basically, when you look at core PPI, CPI, things like that, what you're looking at a measure of is without things like food and energy for core, because they're so volatile that their fluctuations can basically skew the rest of the data, all right? So when we're looking at core data here, and again, traders tend to focus a little bit more on core for that very reason versus retail sales. General, you know that just includes automobiles, right? But it's the change in total value of sales at the retail level. So why is that important? Well, quite simply, think about it. If you've got good retail sales, if you've got good unemployment figures, right, meaning that more people are finding employment, you want to see more jobs created, right? There's a fine balance and there's a lot of nuance that exists around all of this. But in a very basic level, what you want for a risk-on environment, are low interest rates, a stable economy, right? And, you know, at the moment, what we're seeing is, and also we look at the dollar in that as well, you don't want the dollar to be too strong. The dollar being too strong causes a lot of problems, not just for other economies, but actually for the US as well as the bond market. So what's going on at the moment, you know, this is just my opinion, right? I try to be as learned as possible and speak to a lot of really, really top people and research as much as I can outside of running the trading desk at TBN. You know, my first and foremost job is as a trader. Remembering none of this is financial or investment advice, all right? But the way that I'm looking at this at the moment is that, you know, I think the US needs to refinance a lot of its debt, right? You know, in the bond market. And to do that, it needs the bond market to be a little bit lower. All right, we're going to look at that shortly as well and take a look at why the bond market's important and how you can kind of look to get a gauge on it. So let me make a note of that. We're going to look at bonds. Right, so the reason for that is when they want to refinance their own debt, they're going to sell bonds, right? So they're just selling government debt. They're selling US debt. Now, to do that, if the yield is too high, they're selling it at too higher interest rate, meaning that it's very appealing and people will come in and buy that, which is good. It's what they want. But they're having to pay a higher yield, so high interest. They want to get that interest down so they can sell as much debt as possible and cost themselves as little as possible in doing so. Now, things like tariffs, for example, things like sanctions, these bits, actually, let's take sanctions out of tariffs, all right? What we want to be talking about is tariffs, first of all. And then that's what we're looking and saying, okay, well, why are the tariffs there? A lot of people are like, why is Trump kind of attacking his allies? Now, a lot of government, a lot of politics is obviously positioning, right? So we need to take a look at the other argument. Look, I'm not the biggest fan of Trump. I think I'm very kind of open about that. You know, for my own reasons, I don't think that, you know, he's particularly good for humanity. But from an economical standpoint, looking at the US, him driving those recession fears, him driving this down, when you've got a Fed that are quite stable at the moment, Powell, who I think is doing a really good job along with the Federal Reserve at bringing inflation down. Trump needs a way to get the bond market down and a way to weaken the dollar. And at the moment, he's doing that by pumping a lot of uncertainty into the markets. All right. So anyway, retail sales today, they're going to come in. Monday's always a very, very tricky day to trade anyway. A lot of traders waiting for Monday's range to kind of set. But for retail sales, we want to watch that. All right. We've got a forecast here on core of 0.3% and 0.6% on retail sales. All right. So figures coming in above that, will lead towards, be a little bit of an indicator towards, a healthy economy. People are out there spending money. Maybe people are willing to speculate a little bit more. Can that then be a good thing for risk? However, it's also a good thing for the dollar, right? So the counteracting side of it here is that a strong dollar normally can be a limiting factor for risk. However, with an economic environment where the dollar is getting deliberately driven down, we don't always see that correlation washing through. Okay, so I know some of you will be bored to tears with that. If it is something you want to know more about, please do reach out. Happy to share my knowledge on it and also put you in touch with people who are far, have far more expertise in that area than I do. All right, people that I learn from on a daily basis. Anyway, we then don't have anything on Tuesday unless you're trading forex markets and you're looking at Canada as well. But Canada's CPI is going to be interesting at the moment with that, the tariffs and the trade war that's looking to heat up there between the US and Canada. Going through into the US, we're back live again on Wednesday, and this is the really big one here. All right, federal funds rate. Now, what does this mean? It's what they're setting the interest rates at, all right? So at the moment, we can see they're at 4.5. Previous was 4.5. So what does that mean? It just means that they're not looking to cut the rates, which would be bullish, but they're obviously not looking to put the rates up either, which would be bearish. A neutral stance has been priced in very heavily by the markets, all right? There's not an expectation for cuts. There's not an expectation for rate hikes. So the chances are that this can be a little bit of a nothing burger. Now, what you then want to look forward is the FOMC economic projections, where they're looking forward to that. That and then the statement for me is where this week really lives, because it's a lot about whether you get that hawkish or dovish tone. All right. So hawkish, you think about it in that way, think of it like as bearish, dovish as bullish. All right. For example, Powell could come out and say, look, we've kept interest rates the same, we've kept them flat. However, we can see there being multiple cuts later in the year, right? Now, that all depends how the market takes that information on. Normally, that would be very bullish, right? But the markets also have to kind of digest at the moment and take on board the tariff risk. And then they're looking at this, they're thinking, okay, there's geopolitical risk going on at the moment as well. So while there's uncertainty in the market, leads to unfavorable trading conditions. Markets don't like uncertainty, right? We saw that last week, all right? And we went, with PPI, also with the CPI print. The print last week was amazing for risk markets, really. It's showing that the Fed are doing a much better job against inflation than was projected. They crushed through their projections for it. Still, the market couldn't catch that, risk couldn't catch that headwind bid. And the reasons for that are because mostly there's a lot of uncertainty around these tariffs and a lot of economic uncertainty as well. Good morning, by the way, Seb. Sorry, I missed you there, mate. Jojo as well. Jojo, one of our wonderful members and someone that has a wonderful handle on traditional markets, actually. So she'll be well ahead of what I'm saying here. Domsey, hello, mate. Great to see you. Anthony as well. Everybody flooding in now. Wonderful to see you all. Just as we hit the 1500 mark here on Twitter. Bear with me one moment. I'm just going to take a sip of tea. This poor bugger normally sits there and gets cold throughout the show. All right, so look, I've blathered on for 13 minutes about news, rates, etc. What else do we have? Well, we're then looking down to Thursday. We go down all the way to Thursday. No news there again for the US markets. Close out Friday as well. So if we do get a scene painted on Wednesday that can just give us that little bit of a risk bid, right, then that could flood through into crypto. And what am I going to be looking at to back that up? All right, so let's switch across to the charts. Now, I've got the Bitcoin chart up first, but to the annoyance of some of you, what I am going to do is I'm going to explain all of this, just our 4-hour chart. And the first thing I'm going to do is I'm going to go across onto the NASDAQ chart, all right? So let's take a look over here. Actually, we can go on. Let me see what we've got on here. Okay, so NQ chart that we've got over here at the moment as well, obviously we can look at the S&P 500. Okay, the reason that we tend to look at the NASDAQ is because it's heavier with technology stocks, right? There's more of a balance of the US top performance on the S&P 500, right? The NASDAQ or the NAS 100 contract as well. We're looking at very, very technology heavy stock index, all right? So what do we want to see here? Well, one of the real kind of starts here for me is looking at a recovery here in kind of traditional markets. So, you know, at the moment, you know, we've come in, we've set the low, we've set a higher low, right? We now want to get this higher high in place, right? And we want to, you know, really establish price above this level, all right? The reason for that is because if we're looking across and we're trying to kind of dissect and digest all of this data, then what we want to see is an uptick in risk markets. And typically we look forward for that. And yeah, Domsy, you're absolutely right. I don't know how I missed that on the chart. We do have unemployment data this week. It's normally on Thursday. That's completely correct. So again, if we get that Wednesday setup from the FOMC where we get that kind of good risk environment, maybe you start to see the risk bid coming in a little bit more. If we get good unemployment data then as well and shows that there's recovery in the economy, that can do kind of two things. It can put a bit of strength in the dollar that can add a little bit of kind of a barrier for risk. But at the same time, the markets might see it that, okay, you know, economy's recovering well, the Fed are doing well with inflation fears. So actually, maybe the risk bid is starting to get, you know, a little bit more likely. So looking at this, really, really simply looking for these kind of recoveries here on the NASDAQ. Now, of course, you know, we need to factor in the fact that's just a 4-hour chart, right? We start going back here and we're looking at the daily, for example, then, you know, we can see here this big sell-off that we've had, all right? In through February, basically started last month around about the same time as now, almost to the day. And then it's just been heavily down since. So we want to start seeing some recoveries on a daily scale. One of the things I really like to look out for, I normally like to see them a little bit bigger than this, but are these gap inversions, all right? So you want to look across and ask yourself, are you at any key kind of area where this could be catching a bid, right? You can look at this whole leg up. You could look at this one here, for example, because of the break of structure or this whole kind of, you know, displacement leg low to high. Throwing 50-50 on it here, you can see, but really in terms of the Fibonacci, really nice reaction here at the golden pocket. So now we need to see some follow through here, see price get back above here and then start to establish market structure to the upside. If we start seeing that, there's even more chance for me that we start seeing an environment that's a lot better for cryptocurrency, okay? So there we are, 17 minutes into the show. You know, I'm sure some of you enjoyed that. I'm sure some of you absolutely loathed it, but that is where we are. Now, I'm going to start today slightly differently on the 4-hour chart because I had a lot of people message me about my thoughts over the weekend, members of the Birdness as well as some people on Twitter. So thank you very much for reaching out. I do always appreciate it. If I haven't been able to get back to you, I do apologize. We do get a lot of messages and really do try to kind of get back to everyone. However, this has just very simply been the plan for a while. And I said yesterday, the parameters are quite simply this. These areas here, so these are our two main inversion gaps here on the 4-hour. It was this bearish gap here. Price got back above. Wasn't quite enough to get the bid started here. Why was that key? Because we're acting here at this bullish weekly gap as well. We've taken high time frame liquidity from this low, failed to close below it, showing the buyers were willing to step in here. We saw the absorption and price has pumped. Unfortunately, what I was really looking for at this point here was to really see some impetus from price and to see a large move above, and then to start seeing some gapping where we could get involved. Now, we didn't see that. Ultimately, what I outlined was the fact that when price rejected back here, it's fine to see price come down and take liquidity, right? Actually seeing these kind of more stable moves tend to be a little bit better, right? For example, really sharp, aggressive move up here, really aggressive retrace, another quite aggressive move up here, and then you see you step into this kind of staircase on the way down. Now, a lot of people say with crypto, which is true, staircase up, elevator down, right? But actually we want to see a good efficient market structure being built here. So I don't mind this at the moment. We have to hold key levels. These equal highs, which is this high here and this high here, were the area of key rejection we were looking at because they also sit within inside this daily gap. All right. Oi, Gordon, how you doing, my friend? How's Bedford treating you? So on an intraday basis, I'm happy to ping pong between these levels and then ping pong between these levels as well, all right? However, on a daily basis, or if I'm looking to position myself for any kind of swing plays or investment plays, that's great to hear, mate. You look after that wonderful place for us. I want to see price above this. Again, same kind of principle here, right? We've got this daily gap, just as we looked at on the NASDAQ. These are key areas of rejection. The market loves to return to these, all right? You normally see the sweep on these extremes, right? The liquidity at the lows and highs. And then you see price battling with these gaps, right? Ultimately, if we're in a downtrend, we expect these gaps to reject price. When they don't, and we get these inversions, let's just look at some examples of that. Let me find you a bullish one. There was a really nice example of that over here. All right, so we had this bullish gap. Price actions coming through, found nice support here, nice support here. You can start to see the bounce on this one, cleared out some liquidity, came into liquidity from this high. We closed below on this candle, right? That very candle closed below. Let me zoom in for you so you can see it. All right, drag that across. You can see the close below here, meaning when that happens, we then look for this area to become resistance. You'll see these boxes then in purple, exactly the same as we've seen lower down on the 4-hour chart. And as we just looked at on the NASDAQ here, ultimately, this is just a case of support. So we've seen support here, turned resistance, all right? And then price starts to sell off. So this is a really kind of key area that we're looking for in price, but we're looking for that down here. And this is what we want to see the reverse of on the daily chart, all right? And that's really where my thoughts are here on Bitcoin. We can zoom out to the weekly as well, forget kind of this bit of nonsense in here. Not nonsense, but it just doesn't mean anything on the weekly. We saw this really strong weekly close here. The whole plan has been based around prior week's close, which is here. We had the swing low of this extreme wick that led into this weekly gap. We'd also seen a nice 50% retracement on the Fibonacci, which was from the leg, from the low to the high. And this is a bullish area, right? We want to see if the bids start to come in here. The conditions for that, we're looking at this low, all right? So we look at this low, we see liquidity here. If you see prices close below this, especially if you see a full-bodied strong close below this, then the assumption is that price is seeking liquidity lower. We would look at this low. This gap has to be considered, but looking at that as its basic principle. Now that we've seen price come below and close back above, it's closed back within the range of this. We also have an inside bar pattern between this candle here and this candle here. So now we look back in the range, we're looking higher. Ultimately, where to? Well, we don't want to get too excited because we've swept a low. All right, now we're looking for the high. We're like, oh, okay, do we have any gaps here? We don't, right? So that's why we then move down and we say, okay, on the daily scale, where's the early stages of recovery? It's this gap here, and it's the fact that we set this bullish order block, right? Then we say, okay, well, on the 4-hour, where do we start to achieve that? Well, these were the early stages of recovery here and here, all right? So you can trade these again with this close above. You can trade to the resting liquidity intraday, resting above these levels to get some high probability trades. Obviously, swing and positioning is very, very different. You wouldn't be looking at this lower time frame. This would be more an execution time frame. However, right now, let me just do it in red so we can see it clearly. The immediate conditions are this. We need to get above the daily gap on a daily scale, but we really need to get above this 4-hour gap on a 4-hour scale, right? That's the first stage of the recovery that we want to see, because then we're saying, okay, what have we done here? We've rejected a daily gap. That's fine. We found support at the 4-hour inversions. Look at this as a whole level of support. Also, this gap here as well, a bullish gap. Now we need to see price get past this. Seeing rejections here means that price is looking normally to seek liquidity lower down. And as we look lower, this is the first low that we see. So what we would look for in this situation is for price to do this and recover this level. And then ultimately, as terrible as that line looks, in fact, far too terrible to be left on the chart, we'll do it with this one. Let's see price purge liquidity, get back inside this level, show some acceptance. Then we want to see inversions here and ultimately price pushing up to realign itself with our high time frame plan. Okay, so what we're going to do now is I just want to take a look at the dollar index as well. Now we've seen a very, very weak dollar recently, we've seen a large sell-off in the dollar, which we measure by looking at the dollar index, looking at reactions down at this low. In fact, this was from the I think one of our last week's live shows, but failure to displace below this low. Price came back in here, so we're looking for price to extend to this high, which is something we'll look at on the 4-hour. We saw the throw over. This was the plan. You can see the dodgy little hook here, which will become apparently looking for this level to throw over, meaning deviation. Price did that, came back in. So now we're looking for continued weakness in the dollar here and for it to move back down to this area of liquidity. Now, normally seeing weakness in the dollar isn't the worst thing for risk assets, but we have to factor in a lot more than that at the moment. Something else that we want to see, as I was speaking to you earlier, is looking at the bond markets, right? And here we have the US 10s, and this really, your 2s and 10s, they want to get the yield down on these, right? Because if you see it up here, right, 4.8%, You know, this is buying government debt. You're buying US debt, which is, you know, pretty much as safe as any country's debt that you can buy. And to do that, they'll give you an interest rate of almost 5% there, so 4.8%. So you think if you're managing a lot of money, a fund, your own portfolio, that's attractive. That is very attractive for bonds, right? You know, in recent times, we saw it up here just creep above 5%. But obviously, look, right? You know, bonds being all the way down here, you know, like 0.5% here in 2020. We've seen that go up. Basically, you know, it's looked as a little bit of a run to the safe haven, the bonds play. You see that coming more and more, obviously, as we see, you know, some more risk-off sentiment come into the markets. But ultimately, this is being pushed down at the moment in the best way that it can be by news, the government, etc., because they want to refinance their own debt. Now, the US2s, we've got the same situation happening in here. We're driving down into a large gap here, but actually the kind of pivot point, I'm not saying we're getting this low, by the way, but the pivot point that's quite interesting here is like this kind of area. Right now, again, I'm not saying we're driving these down. I mean, the government would love to see them down in the mid to low 3% range, right? Because then, obviously, when they're selling that debt, they're not paying as much on it, okay? So that's what we are looking at there. So what do we want to see really for that kind of risk market to come back? We need to see a little bit more certainty into the markets. It's a lot more of a news-driven market at the moment. I have the pleasure of knowing some really top fund managers in London and other places around the world, as well as some of the top people in the cryptocurrency space, bond markets, etc., FX especially. And, you know, it's so interesting speaking to them week on week because so many people have like a difference in view. I hear it all the time on Bloomberg, right? You know, you hear it all the time on these really, you know, I've listened to some great podcasts with some amazing people. Big shout out, for example, again, no affiliation, but like Macro Alf. Really, really top guy, Italian gentleman, used to work at one of Europe's top central banks, has an unbelievable handle of macro. And there's an American guy called Brent. They run this podcast together, which I've really, really, really been enjoying. You know, Macro Alf is from the Macro Compass. So I don't know if you guys know that, right? But if you are interested in those podcasts, it's called the Macro Trading Floor. Again, no affiliation, but it's really good to get this broad view. And one of the interesting things is, you know, they're always looking at the market from both sides as we do. And you can make arguments for both because the government want a weak dollar at the moment and they want bonds to be lower, right? But do you want to be short these markets right now? Do you want to be short the bond market? Do you want to be short the dollar? No. You know, I just don't think that's the right play. You know, you're looking for overextensions in these things, right? You know, using something like this, for example, you can use things like the RSI. You can use like a stochastic RSI as well, the idea of this kind of, you know, momentum indicators, which I find really, really helpful, right? They're oscillators. So you're looking here for things like divergences and whatnot. You know, obviously this is a little bit messy. What I actually use for divergences is our in-house indicator BPRO, which is also like a trend following indicator. But ultimately what we're looking for on here, I'll pop that on for you guys so you can see as well on here. What we're looking for on here is confluence, right? So you can see BPRO got us into the bearish trend over here on June the 5th in 2024, took us all the way down and then got us bullish again 7th of October 2024 when we got caught this nice uptrend. We moved bearish again end of November. We moved into this really kind of flattening out period and then we moved back into this bear trend here, which was got into, you know, mid to end of February, which was really helpful. Now, one of the things you can see on here are the divergences as well. So this is when, you know, the price action that we're seeing is disagreeing with the oscillators, right? So we're looking for hidden strength or weakness in the markets. We can see this bullish divergence here. I know a lot of people talking about it. What is a bullish divergence? Also, guys, if you are interested in anything like this, we've got some amazing resources over on our website, right? Let me just cut across to that very quickly because these are the kind of things that can really help people out. You can go across to the Burb Nest, that's B-I-R-B, B for Burb, right? The burbnest.com. And then if you go to resources, you can go on here, go onto the infographics page. If you've ever wondered about things like divergences, for example, you can come on here and you can see, you know, what you've got on here, as well as, you know, regular divergences, hidden divergences. So I'll show you what that plays into. The other things you can do is use all of our free tools as well, looking at things like the crypto screener, all right, looking at weekly, daily, 4-hour. So Bitcoin at the moment is, you know, these things are interesting to me because what I typically use these for is I'm looking for, if I wanted to short an asset, and I'm not saying I want to short Bitcoin, if I'm seeing bearish on the weekly, bearish on the daily, and a bullish on the 4 hour, then I can look at the charts and say, okay, is this the pullback? Is this the, you know, the bearish, the corrective move, if you like, in the bearish trend that allows me to take a short position? If I'm seeing the opposite and I'm seeing strength down the line, then, you know, one of the good things to do is look for, I know it's going to be difficult to find them in these conditions, right, but is then to look for bullishness on the weekly and the daily, and bearishness on the 4 hour, meaning that you could be getting that, you know, that corrective move that allows you to position yourself bullishly. Okay. So then you can go on to things. You can look at like the crypto heat map. All right. And you can see the week started okay, muted, but crypto's looking quite good. Then for a health check, you can pop across onto the stock heat map. All right. And this is something that I typically set across to the NASDAQ. All right. So you can NASDAQ 100, composite index, etc., depending what you want to measure it against. And then I'm looking at it on here and saying, okay, actually, you know, we're seeing some okay environments here for risk at the moment. The risk bid is okay, it's relatively healthy, crypto's looking quite good. So you can then plug that thing in and say to yourself, okay, well, if the bid is coming in for tech stocks and relatively risky stocks, maybe the market's willing to start the week with the bids into the risk market, moving into that data, all right, which is obviously quite heavily coming in the FOMC. But do make the most of that, guys. It's all completely free. Like I say, it's just over on the website. If you haven't written that down or you want to, you know, catch that, then do just reach out to me, or just go and grab yourself your free membership to the end of March and you can get all of that. Anyway, just so you're aware of that. So as we look at it here, what we're interested in when we look at, say, the RSI here, is we see this line here, which I'll just do extra large so it stands out. It's this low to this high, yeah? Measured in the same space compared to, sorry, this low to this low, you see it's a higher low, versus this one to this one here, which we can see is a lower low, yeah? So what we're looking at here is the divergence. That means that price is showing us here that it's at a lower low. This is showing us that it's at a higher low, right? So we're seeing strength come in here, and then we're looking for that to wash through. The great thing about BPro is it gives you these divergences without the need to use an oscillator. All right. So you can look on here and you can kind of say, okay, where are these key divergences coming in? Am I at support or resistance level? Yes, divergence, nice little trade there. Divergence is here at our key support level as well. And the reason that I quite like this bid over here is because we're reacting at this big bullish gap. All right. So you can just overlay these kind of simple ideas. And then on here, you could drop this, say, to a lower time frame and say, okay, if we're moving from a daily, then we'd look actually at an hourly here in an execution based time frame. Don't get me wrong. I know I'm doing this on the bond markets. You know, we would use it on crypto typically, or, you know, FX, etc. You can drop it onto a lower time frame and say to yourself, all right, well, if this is the area you're looking to get bullish, what are you looking to do? Are you looking for the market to establish itself a little bit higher? You know, are you looking for market structure shifts? Or you can just use BPro. BPro tells you to get bullish here. What you do when you want to take a long trade is you look for a pullback to get involved, and then you get a divergence here and you can be a buyer, for example. All right. Obviously, you can do exactly the same thing with price action as well. But also, you know, if you take up the offer with the free membership, you get access to BPro as well. So let's take a look at Ethereum. Yeah. I'm sure I've rattled on enough about bond markets and traditional finance now. But honestly, guys, people ask me all the time, one thing I would really, really recommend for everyone, and there's a couple of things, right? You know, outside of all of the kind of wellness, treating people kind, etc. stuff, just to do with trading, find out what type of trader you are before you commit to learning and really doubling down on your education, right? Are you someone that can intraday trade? Do you have time to intraday trade? Are you somebody that has a busy work, social, and maybe family life, in which case you maybe need to be looking at swing at best or position trading? Find the very best education out there, find the very best communities. Yes, of course, I'm going to back my own over at the Bird Nest, but do your own research, come and take a look, take the opportunity with these free trials to test people out, then find methodology and a proven strategy. You don't need to reinvent the wheel that works for you, and just pound every hour that you possibly can into it. All right. I'm not joking. You have to put in the work, right? And you need to be prepared. And if the market conditions don't suit you, don't worry about it. See this as a gigantic window to improve yourself. All right. So let's take a look at this over here, right? We're just going to take a very quick look at how the figures have come in as well. So we can just take a look. And then we're going to take a look at the market reaction on the very low time frames very quickly before we run down some more crypto assets. So here we can see, what have we got? Core retail sales. Now this is flat, all right? So that's pretty good. But look, previous was down 0.6%. So that's showing a good recovery even in itself, okay? But retail sales month on month, obviously, as we include the automotive industry, is down 0.2%. I'm not sure really, a little bit, obviously, this older data. I think we could see that take a bigger hit moving forward as well if we see the tariffs start to come in, which would affect the automotive industry. But as it stands, let's take a look at the early market reaction here, all right? And we're going to take a look starting here on the NASDAQ, all right? So as we look at this over here, let me just, here we go, or actually we take a look exactly the same as the S&P 500. Yeah, we can see how the market at 12:30, which is when the news was released, on this exact ticker here, yeah, has taken that news immediately. Bearing in mind this is a 1 minute chart, yeah, and actually often what you see with these kind of liquidity grab moves is price running its way up to take liquidity before breaking down. Not saying that's going to happen, but we do need to be aware that obviously we're coming into an area of key resistance. But you can see with decent economic data here, and again, focusing quite heavily here, I think, on the fact that retail sales coming under normally leads to a weaker dollar. All right, so that kind of helps risk markets a little bit. It didn't miss by enough that it shows a really weak economy, but core data coming in flat, showing that kind of underpinning bit. So again, it's not really telling us as much as we would like to see. The much heavier data kind of hits later in the week, but ultimately it's not the worst. So sorry, let me just show you that on the, forgot to flick my screen over for you with the S&P 500. So sorry, this is the 12:30. Yeah. This was the news drop. What happened just before the news? Market's kind of trending down a little bit. Again, this is just a 1 minute. Then price comes back down to here. The news drops and the market sees that just initial push up here. Normally, I wait 15, to 30 minutes to wait for the market to settle. See if you get any abnormal kind of news reaction here that sets any particular kind of news highs or lows, which can give really good liquidity pools for intraday trading. But overall, the market's just seen a very small but initial pump based on that news. So that's all out of the way. Let's go and look at Ethereum, shall we? So here we are. What's been the plan here with Ethereum? Right, well, quite simply, we've got this kind of key pivot point on the very high time frame levels. We're just looking to kind of get down below that, right? We're looking at this a little bit more on a weekly scale. We held this level on a weekly scale. It's not a perfect area. It's just an area that I'm looking at, really, where we've seen key resistance turn support, long absorption wicks here that have really pumped the market. Market came back into this area here, lost it very easily, treated it as resistance, got back above it, held this area, led to a nice pump here, led to a really nice pump here as well. So when you see price taking liquidity in these areas, if we're not seeing quite a strong reaction when we got this close below, we were saying price is probably seeking liquidity a little bit lower down, all right? So to give you the context of that. Now, here on a daily, quite simply, we were overlaying parameters last week on the shows. These are the charts that we use for the show, so we keep all the data on there, so we have ourselves accountable, all right? This we'll look at on the lower time frame, so don't worry about that. It's not as well as these. On a daily scale, we were saying, look, last week, and we can see moving in Monday the 10th, we wanted to see a reaction at this low, price recover this area, get back above here, and then we could look to take some long positions on. Ultimately, it's just currently being suppressed down here, and now price is ranging right at the bottom of this key kind of support area. Looking at this now on the 4 hour, and this is where the other lines come in. Look, these up close candles here, this was the area we're looking to hold as support. But basically what we can see here is these up close candles, meaning this is where buyers stepped in. They were caught offside here. This sets an order block area, all right, or supply demand, however you look at it. Price then sells off. Retests of this area are normally then good places to get back on board with the trend. Here obviously we're in a downtrend, and then we need to see that that change, all right. Again, this is the gap that we want to see price recover. Price still hasn't done that. Very, very flat here on Ethereum. I was listening to this really great podcast this morning. Actually, I'll share it on Twitter later. Was doing a sunrise walk with Yuki, listening to these amazing people through Bloomberg who were kind of analyzing and looking at Ethereum, and came with some really, really good points, talking about the disruption of chains like Base, etc., and how actually the dynamics of Ethereum could be changing, how they're coming under threat, as they are, and how that is washing through into the token, right? Just really, really, really insightful. Not really a way that I kind of thought about it, but actually I think that's right. And yeah, thank you, Gordon. If you do enjoy the content, guys, please do take a moment to smash the like button. I know most of you aren't on YouTube. I know most of you are on Twitter, but if you do enjoy it, please, come across, give me a follow on Twitter, BC_Richfield. It'd be great, to hear for some more of you. I'll pop my handle in the chat. All right, if you get the opportunity, just give us a follow over there. Give the Bird Nest a follow as well. You can find all of that, the link in my biography. But thank you very much, Gordon. Yeah, please do smash the likes if you enjoy the content, guys. Really does help the algorithm pick this up. So ETH is really simple. I think ETH's just consolidating here. I think the market uncertainty is palpable. I think we want to see some recoveries here. If I was looking at this as like a super optimist, what I would be saying is this. I would be saying, okay, price has at least taken some local liquidity here. All right, price has kind of had a move up here. It's had a little bit of displacement. When we are seeing a little bit of gapping, you normally want to see a bigger move, right? Like this is a move with displacement. Price moves higher, sells off aggressively, leaves you a bearish gap. Intraday trade shorts from this gap are normally quite a nice way to pay yourself, all right? Because then if you're wrong and this gap inverts, we look at it as support and then we look higher, all right? So it gives you a clear set of conditions either way. But we also see this kind of overlaying gap here. So for me, if we close above this, intraday longs into this high, for example, and then looking for the rest of this gap to be filled over here. Now, ladies and gents, does anybody have any tickers they would like me to take a look at? We'll make 5-10 minutes towards the end to take a look at some stuff. Something I do want to take a look at. I know it's like I've been saying to you before, but I update you on this every week. Why? Because I just love the company. I love what they do, and as I've been saying to you before, I'm not here to shill you shit. You can go and invest in whatever the hell you want, right? Genuinely, you can. It's absolutely up to you. I'm just trying to kind of give you, or maybe vocalize my own kind of thoughts. I find it really useful doing these shows to kind of lay out what my own thinking is, kind of having these internal to external monologues, right? But this is a company called Alchemy. The ticker is ADS. They are one of my favorite companies in the space at the moment. I've had the absolute fortune of being introduced to the company and really kind of understanding what their mission is, seeing the companies they're working with, people like Coca-Cola, for Christ's sake, right? Massive, and there's others as well on their books, massive companies. And what they're doing is they're looking to disrupt the world of marketing, right? And a lot of people don't know this, but before I became a full-time trader, I used to build and sell companies as well, and one of those was a digital marketing company. So I know a little bit about that space as well, and I know certainly how ripe it is for disruption, and I think these guys are so well placed for it. What I'm doing at this, I'm not looking to actively trade this, I'm investing in this, right? So I'm looking to be a buyer, and the reason I've got these circles here is because I was a buyer here aggressively. I was a buyer here before. I was a buyer here again, circle. Like I said to you, I'm going to buy here, and I'm going to buy more here if we get down to it as well. I'm just looking at the value proposition of this, right? Which is there's a great recovery platform for it. When the market's risk profile realigns, that this becomes a bid, I think it can move incredibly quickly. I think, when you're looking in these conditions for good investments, you want to look at a flight to quality. And that is exactly what I'm looking for there as well. So very, 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 very happy. Miguel, hello, mate. See you sneaking there as well. Anti-BC Sebster ask a question that I'm pleased to hear. Awesome. All right. So again, this is what I'm looking for here. I'm not driving this down onto the lower time frames. Like I said to you last week, sweep of this low, still wanting to see some established price action above this high. We got a nice little pin bar sneakers above here, but again, weekend trading, which isn't something I do often. Wanted to see some follow through here, which we haven't seen at the moment, but I'm more than happy to gobble a load more of this onto the balance sheet down there. Not suggesting that you do the same, by the way, but what I am suggesting is if any of that sounds interesting, get over and check out Alchemy. And ultimately the ADS token as well. So does anybody have anything else they would like me to take a look at? I'm going to take a look at Sol. Again, just looking at this on the weekly as we were here, this was a good area. Added some more Solana here, added a little bit more Solana here. Yes, we've sold off again here, but again, I quite like this area. This is the pivot point, but the area in terms of good buys for me here is this. All right, the consolidation before this good pump higher. So yeah, I'm just kind of waiting for this level to be run in an ideal world because I've already added some here, and again, like I say, added some here. So if we move lower here on Solana, I think, look, whether this could take years for the markets to recover, you just don't know. Nobody knows, right? All we can do is take leading, lagging indicators, seasonality, all the information we've got, what we've seen historically, what's going on in the economy, and then you've got to put all of this together in this big kind of witch's cauldron, and ultimately lean on the expertise of the very best people you can find, and then make your own opinion, plan, and stick to that bloody plan, all right? Moving this on to the daily. All right, I quite like the reaction that we've seen here. I tell you what I don't like is, and again, markets can move a little bit less rationally when they're liquid. Not that really makes any sense. Just if they're liquid, they obviously move a little bit looser. And what I mean by that is we saw the inversion of this gap here. Price came up, now immediately retraced this gap. I was nailed on for this high being taken out here. Right, let me just show you. So this high here, when we inverted this gap, all right, bearish gap here, closed above it, inverted it, and we came across this setting like a large kind of order block. Then I was looking for this area to be retested. When price violated this straight back down on the next candle, and people said to me, how do I take that? Well, really simply, we were short to this line. So it was just, it's a great indication. Even if you've gone long early then, so you get stopped out for your 1R, you've made that back in spades, shorting into this low. So that's what we're looking for in terms of confirmation. Again, and we're going to look similar to this on a lot of crypto at the moment. That was the bearish gap, looking for that inversion here. Again, we got that on the Saturday, so I always look for follow through here, which we didn't get. And now we've also come off the back of having an inversion gap to the downside here. So price is now fighting with this. However, obviously, once again, the inversion was confirmed on a Sunday close. For me, if price holds below here, I think we start to run out these lows here. I really like the 110 level, or 110.01 to be specific here on Solana. If we get back above this level here and we start establishing ourselves above roughly 135.5, then I'm looking long into these highs up to kind of 152.98, and then again up into these highs over there as well. Let me just take a think about this. None of you are going to really probably be that interested in gold, so I can leave that. Not really the Forex market, are you either? Link, we love Link, and our Link Marines. The guys are absolute freaking legends. I mean, just one of the most supportive and best communities I've seen through many, many bull runs. And looking for this recovery. And actually, this is a really interesting level for me here, all right? So I'm not going to go back too far, but why is this an interesting level here? Well, let's look at this from a point of support and resistance, yeah? So as we look at it across here, we can see, and you can, again, drag this all the way back to here. Maybe you want to make it a little bit deeper so that you include these as well. But look, key resistance gets back above support, pump, support, pump, support, big pump, support, pump, pump, big pump, pump, pump. Price gets under, resistance, 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 above, retest, buy. That's why this was a good area to buy some Link. You can find it on my Twitter profile at some point as well. This was a weekly gap as well that we were looking at. So let me just show you here. This was an absolute slither of a gap. And then when we close below it here, the thought process is that we first chased down that prior week's low, and then there's a very small inefficiency in here as well. But again, this is just coming into a good area. You don't want to be short this area. That's key support. And this is the consolidation that led to a really big move higher, right? So you don't really want to be fading into areas like that. We want to see price start to establish itself here, for which we kind of focus a little bit more on the daily. Just going to get that off the charts now because we violated that. Yes, actually, let me hide it because that will become resistance back on the way up. However, what we're looking for here is, again, very similar. We've seen that initial purchase. We really need to start taking out this high here coming down from a low before we really shift structure. And we've got these inefficiencies running down here as well. So if we combine all of these together on the daily scale, really want to see price starting to get back above here. So not too much immediate good news here for the Link Marines, but once we're back above here, I think we absolutely fly. But at the moment, we're at a key level of support. I think, we lose this and then we're going to come in and start testing these lows, but also kind of looking back across the line here to some of these highs as well, right? If we take in some of these highs in the market, I think, and draw this across, gives us a pretty good indication of where we saw, look, key level lost, resistance all the way through here. So we got that big pump above. No, we didn't get the perfect retest in here, but this area once again proved to be a really, really good area of support. So again, level to level plays at the moment. Seb, Anthony, sorry, mate, if I'm misunderstanding, are you referring to my question about Japanese interest rates and impact on the carry trade? Yes. Okay, sorry, mate, I must have missed that. Let me take a look back through the comments. 1 second. Seb, here we go. Yeah, I can see it, man. Let me pop it on the screen. So let's hope Japan doesn't raise interest rates on Wednesday, so the Japanese carry trade doesn't unwind again. Yeah, so for anybody unfamiliar with that, Japan's economy, right, has been sat at neutral or negative interest rates for a long, long time. We're starting to see some impetus coming in to the Japanese economy, and something that the yen used to be used for example, was a kind of little bit of a proxy for the risk markets. All right, so the same way that we look for, say, weakness in the dollar and weakness in bonds to say that there could be some strength in risk, you would also take a look at the yen. Now, interest rates on Wednesday that we're going into, all right, which also aligns, you've got monetary policy statement landing on Wednesday here. We don't have an exact time for that at the moment, but it will probably be earlier than the FOMC. We have both of those colliding on the same day. So that is going to be a super, super interesting day of news to watch. And again, come and grab the free membership. And then you can come along and we'll be looking at that live on Wednesday's show. All right? We'll also take a look at it on the live show on Wednesday, which will be before the news hits. Yeah, long-term yields are rising a little bit, so it's kind of it's showing for that time that kind of good recovery there, and it's going to be really interesting to see how it washes through. All right, so we're going to cover that on Wednesday's show as well. Awesome thumbs up from here from someone that probably knows a lot more than me on that kind of specialty as well, and there are some real specialists in this market. I will try, and in fact, let me make a note. I'm going to try and dip into this. So let's take a look at the yen, and then we've got rates on Wednesday, and we'll cover that and take a little bit of a deeper look into that. We will do with members throughout the week as well. And Anthony, BC, you said something about other courses if you want to go to the next level. Which website company? So basically, depending on what type of trader you want to be, Anthony, right? So you've got all the courses that we offer through the Bird Nest. So if you want to look at price action trading and hunting liquidity, that would be, say, my course. If you want to look at a masterful course on like machine learning and building systematic trading and quant work, and that there's one on there from the legend Pedler 7 that's probably worth 100 grand in truth for the quality and the information, everything that goes into that. You'd be amazed. If you want to learn about fundamentals, we've got wonderful analysts over there telling you about that. We've got courses on swing trading, on options, right? So you can come along, you get that, you get the link, we'll send you through to WAP where you can get access to all those courses. But then outside of that, you want to kind of be finding the industry experts, people that really take the time to invest into you, people that have a proven track record, and then speak to them as well and just kind of say to them, guys, look, who are you recommending? What is the stuff that you're reading? Like I said, for me, macro markets, yeah, I've got people internally that I speak to about macro who I respect massively, but there's also people externally like Macro Alpha and the London Crypto Club and people like that I have huge amounts of respect for. And it's not that I'm not going to advise them because they don't work with me. We're not like that at TBN, right? We're really not like that at the Bird Nest. We do what we do. The whole point is we share that experience with other members. We're not here to make money off of the memberships and that. We're all full-time traders, but we do run a great community over there. We employ a lot of people, we provide a lot of resources. So please do come along, ask some questions, grab all the resources you can, and even if you bugger off at the end of the month when the free period ends, I'm sure there'll be some wonderful offers for you guys to stay. But if you don't want to, you don't have to. You can take that on board, take your learning and go. But I would be amazed if you didn't find something of real value that could potentially be life-changing for you over there. All right. So just to finish this up, we're still looking at Link over here, right? I think this is a good key area of support. We know we've kind of got this big inefficiency that we're driving into over there. So we do want to remain just a little bit patient with that. Okay, if we don't have any more requests on that, guys, then I think we will leave it there for the day. Yeah, and you're all very, very welcome. Thank you so much for joining in today. Not as many as we normally have, but just shy of 3,000 people live, which is always an unbelievable blessing. So thank you so much to each and every one of you. I'll be back live with you all again at Wednesday at a slightly earlier time of 1100 UTC. So please do come along and join me for that. And like I say, get yourself onto Crypto Burbs profile. You can find this tweet. If you're struggling to find the tweet for whatever reason, just reach out to me. BC_Richfield. I'll point you in the right direction. Come and join us over there. See if you like it. Grab all the information you can and make the absolute most of yourselves. Like I say, I know it's a cheesy statement, right, as we would say, but the best investment you'll ever make is the one in yourself. All right, take that time, make sure you're prepared, and change your life. All right, guys, thank you so much. Everybody that's on there, Seb, Gordon, Foreign Trades Crypto, Anthony, the guys that have been messaging in from Japan and China and Asia, which is wonderful, because I can God only imagine what time it is for you guys over there, as well as our wonderful listeners, watchers, people from all over the world, Australia, New Zealand, that part of the world has me immediately thinking of Jojo, right? The legend Just Pit, one of our top traders over at the Bird Nest as well. Domsey, who was in there earlier as well. Gordon, I think I may have already mentioned you, but you get a second mention as well, as obviously our wonderful Seb does as well. Nit as well, who was with us earlier. And, 3,020 odd of you more that are all tuning in. Thank you so much. I'm going to see you again on Wednesday. Please do keep an eye on the news. We will cover the FOMC and we'll take a look at the yen as well, which again all plugs into this crazy world of cryptocurrency. The optimist in me, by the way, just to say, I know I can sound pessimistic on these shows. I'm just trying to be a realist. But the optimist in me is telling me this, right? The optimist is saying the more and more I look into the data, the more I look into the economy, the more I look at the growth statistics, everything that's coming through, and the US's fight to get GDP. All of this plugs into the fact that I really do think the markets are being deliberately driven down as much as they possibly can be at a governmental level right now, in order for them refinancing the debt, which is coming up Q2. They want to get the yields down on the bonds. They want the dollar to be weaker. When we get into those kind of levels, and you've got to remember, a lot of these technology stocks, things like Tesla down 35%, etc., are going to become really, really attractive propositions for investment vehicles to get on their balance sheet, right? And, I'm looking at that kind of stuff as well, obviously. So the optimist in me is saying that, you've got a pro-crypto president. I don't think Trump wants to be somebody that's going to lead the US into a recession, even though the flags and the signals are starting to pop up. Keep an eye on this, guys, because I really do feel like we're getting the market driven down at the moment into a level that's going to provide some really, really good buys. And if we see QE, quantitative easing, start to come in, that means that the money printers come on in the US, which is most likely because they'll normally do that as the central bank prints money to buy their own bonds back, all right, to inject that money into the economy, pumps the markets, pumps the risk markets. And we want to make sure we're ready if that happens, because there are going to be some life-changing opportunities there. And if it doesn't happen, we want to be positioned that we're protected. We may be open to looking at more defensive stocks, but also then really focusing on, making our scratch, looking at the intraday plays that we can make, looking at those long-term positional plays as well. All right. So again, a really big shout out to each and every one of you. I look forward to seeing you all on Wednesday. Take care, legends, and I'll see you around the nest.